Hello and welcome to Moneycontrol. I'm Kaizad Adajania and you're watching Budget Analysis with me. I have in the studios with me Mr. Homi Mistry. Homi is the partner at Deloitte. Hi Homi, welcome to the show.
Hi, Kaisa. Good evening.
Good evening and thanks for joining. Must be a really busy day for you uh, after the budget and all. So thanks so much for joining us. The first question, Homi, that I wanted to start by asking you is that no status quo, no change in your income tax rates, no change in the slab rates. I don't remember which is the last budget that I actually saw status quo and all these things. But given that the context, Homi, what's your big picture takeaway from this year's budget? Why no changes in the income tax rate and tax slabs this year?
Yeah, so Kaizad, I agree that there's been absolutely no change in the tax rates nor in the slabs. The status quo has been maintained since last year also. There's really no change even in the simplified regime which was announced last year. So things have remained more or less the same. There have been some changes in the personal tax areas which we'll discuss, as we go along in this interview.
Okay, so starting with specific measures, there's been a lot of talk post budget. Even Finance Minister Nirmala Sitharaman said a lot of things about the tax infrastructure, making tax filing easy. Faceless assessments has been more nuanced. So, what is the impact, on the individual tax plan? Can you just take us through how this will really help, and what is the future of faceless tax assessment and making tax compliance easier?
Yeah, so Kaizad, as you know, faceless assessment is already on.
Yes.
Recently, faceless appeals also have started before the commissioner appeals.
Okay.
Today, there was an announcement to further expand it to even bring in faceless appearances before the tax tribunal. So there will be no need to actually physically visit the tribunals. And there's also another proposal made in the budget, bringing in for what you call small and medium taxpayers. There's going to be like a dispute resolution committee which is going to be formed, a DRC.
Okay.
So certain rules and all will be announced, but one of the conditions is that the person's income should not exceed rupees 50 lakhs.
Okay.
And the additions or adjustments made to the income should not exceed rupees 10 lakhs.
Okay. So the dispute should not be more than rupees 10 lakhs.
Yeah, the addition to that's correct. That's correct.
Yeah. Okay. And what you've elaborated how the faceless appeals have come about so far. What more can be done, Homi, in your experience? You've been a chartered accountant for a number of years, so what more can be done in this faceless appeals? What's the future? Where are we headed?
Yeah, so the whole idea is the government has been said they want to bring in transparency, efficiency, accountability. So they want to go completely faceless. They don't want to have this personal or physical interaction. Maybe in certain cases where issues may be a little bit complex, etc., they've also given this provision whereby you could have sort of like a video conference or a video meeting with the tax authorities if you want to explain the positions which you believe may not be easy to explain just by sending responses.
So that is so the the mechanism to appeal personally is still there. In case if, let's say, the faceless assessment does not give you a resolution that you think is fair, you're saying that there is still scope for a person to sort of appeal in person. Because that's been one of the complaints that we've been getting from a few chartered accountants we've been speaking to, that too much of computerization also takes away the human element. And when there is a resolution being given that is not really acceptable to you, what do you do?
Right. So there is a process by saying that there are provisions to say that you can also request the tax authorities or the appellate authorities that in some cases, can you also not give us the benefit and we would like to have a in-person, not in-person meeting, but a face-to-face meeting, but by way of video conferencing.
By way of video conferencing. Okay. Homi, moving on, Finance Minister also announced about senior citizens above the age of 75 not having to file their income tax returns.
Right.
How big is this move? I mean, are there any conditions to be met, or is it as simple as it sounds?
So this is, of course, a move for the first time where a certain sector of people will not have to file their tax returns subject to fulfilling certain conditions. So what's been proposed is that if the senior citizen is 75 years or of age or above, having income from a pension from a bank, from certain specified banks, and the government will be notifying or specifying these banks, and having only any other interest income from that bank, then in such cases that individual will have to fill up a particular form. That form will have to be notified and prescribed by the government, specifying what has to be filled up. I presume the individual will have to give various details about the pension income, the interest income, etc. Then the bank will factor that income into account. They give certain benefits, for example, Chapter 6A deductions. For example, if you made investments in NPS or PPF or PF or insurance premiums, certain rebates, they'll calculate the tax, ask the taxpayer to make the necessary tax payments, and once that is done, then there is no need for that senior citizen to file a tax return.
But
So
you said that
this is something new.
Okay, so you said that NPS, the banks will also verify whether you have invested in NPS or other.
Correct. So what happens is, first they'll compute the income, the gross income.
Okay.
Then if you have made investments, any tax saving investments, for example, let's say in PF or PPF or in life insurance or any medical insurance, what they call Chapter 6A deductions, etc. Or supposing, for example, NPS or any of those benefits that the senior citizen wants to claim, then in that case, the bank will also factor all those Chapter 6A deductions and ultimately determine your taxable income and ask you to pay the necessary taxes.
Okay. And I believe there is an additional condition that you also sort of mentioned it in passing, that your interest income and your interest income and your pension income has to happen in the same bank account.
That's right. So maybe we'll have to wait for some guidelines. Maybe
because if you have different bank accounts, then it's a bit of a hassle. Right.
Yeah. So we'll have to maybe wait for some more guidelines, more notifications to come out.
Okay. So we have to wait for details, as you said.
Yes.
Right.
Yes.
Okay. And a couple of things, Homi, that many people say that, and even Nirmala Sitharaman, Finance Minister, also said in her press conference earlier today that to ensure that the rich does not get away by investing in tax-free vehicles meant for the middle class people, two specific provisions have been introduced in this year's budget. The exemption on interest earned from Provident Fund, that is capped at 2.5 lakh rupees. What do you make out of this?
Right. So what is important is that the provision or the proposal is for these Provident Funds where the contribution of that particular person or the taxpayer exceeds 2.5 lakh rupees a year. So in such cases, then the interest would be taxable.
Okay.
In those cases, so if the provision talks of where the contribution exceeds 2.5 lakh rupees.
Okay, so contribution, or is it interest?
It's the contribution. It's the contribution.
Okay, so if you contribute more than 2.5 lakh rupees, then
on PF, yes,
on PF, then the difference between the interest, the difference.
Yeah, no, your question was about this interest. We'll have to wait for the rules to come out. Okay. But presumably the contribution in excess of 2.5 lakhs, whatever may be that interest,
whatever may be the interest on that excess contribution, will be taxed.
Yeah, so we'll have to wait and Kaizad, we'll have to wait and watch for the rules or notification which will come out as to how exactly that taxable interest will be calculated.
Okay. The other provision, or rather proposal in this year's budget, is about taxability of Ulips, where your annual premium over and above 2.5 lakh rupees, if if your your annual premium in that ULIP exceeds 2.5 lakh rupees, then it will attract long-term capital gains tax for me. So do you think now it brings ULIPs on par with mutual funds as far as taxation is concerned?
Kaizad, what this provision is basically trying to say is this. Currently, if you have got, let's say, a life insurance policy, and the premium does not exceed 10% of what they call capital sum assured,
okay,
then when you get the money back, when the policy matures, including any bonus, those proceeds would not be taxed. And in case of death, in any event, it would not be taxed in the hands of the legal heirs. Now, what the finance minister has proposed in the budget, basically to say that, the whole idea of getting these ULIPs was to give really a benefit to the small investors, small policyholders, etc., and not for the HNIs. So this proposal has been brought in to say, of course, this would be prospective. This is for ULIPs which are issued on or after 1st of February 2021. So in any year, if the premium exceeds 2.5 lakh rupees per annum, when you receive the money or when that policy matures, the same would be taxable. The government will come out with rules as to how to calculate also the capital gains. And then the taxation has also been specified. The taxation would be like, they specified it would be like equity-oriented funds. So in case of equity-oriented funds, if the funds have been held for more than 1 year, then the tax rate is 10% plus surcharge and cess wherever applicable. And there's also going to be STT at the rate of 0.1% on the maturity proceeds.
So to an extent, Homi, you would say that ULIPs have been brought on par with mutual funds. I mean, this is something that mutual funds industry also has been clamoring for quite some time. That the differential tax treatment, over a period of time must go.
Right. Of course, that condition also continues that either the premium exceeds 2.5 lakh rupees in any year.
Correct.
But in case of death, when the money is paid to the legal heirs or beneficiaries, in such cases,
there is no tax.
There is no taxation.
There's no tax. All right, Homi, thank you so much for joining on this busy day. We really appreciate your insights and views. And for our viewers, thank you very much for joining in. For more news, views, and updates and continued budget analysis, stay logged on to moneycontrol.com.
Thank you.